live. Welcome to the State of Real Estate podcast. I'm your host, Adam Lowry, as sometimes I typically say as always, but Patricia May will be hosting some shows as well. And we are in the office of Mr. Sam Dongilli of the mortgage firm.
That's right, Adam. Welcome in, man. Thanks for coming out.
Yeah, welcome, man. I'm glad you had us on. I'm glad you're on the show.
Yeah, I consider it an honor.
Well, we'll get into it. Before we get into the business
Yes.
and asking you all the typical questions we ask is, tell us a little bit about Sam and how you wound up in the mortgage firm or in the mortgage business.
Wow. Well, right out of college, I ended up moving right into hospitality for 17 years.
Oh, wow.
Yep. So I was working with Vistana, Starwood, and Hilton, and ended my career as a director of marketing, 60 salespeople under me and support staff. So back in 06, my sister and brother have been in the business now for over 30 years each. And, things were just changing in the industry. And I said, it's time for a change. So they said, come work with them. So that's what got me into leaving corporate America, start working with them. And then, of course, as we all know, what happened in 07 and 08.
Yes.
Right.
We have visited it many times on the State of Real Estate. Yeah.
Wow. I was sitting there looking around going, I used to report to the chief financial officer, chief marketing officer. So I'm sitting there going, people don't need to prove anything. They just say it and they can get a loan. That's crazy.
Was that hard for you, kind of going through and processing some loans and just seeing how everybody was getting approved? Did you have some feelers go up in your mind about?
Oh, yeah.
Yeah.
Oh, yeah. I knew right away. I'm like, this is going to collapse. I mean, here's a novice, total novice. I'm looking at this. This doesn't make any sense. It was, kid you not, it was harder for people to book a timeshare tour than it was to get a mortgage. It was crazy.
That's a heck of a comparison.
It was.
Yeah.
It was crazy. I couldn't believe it. So I never really pursued those crazy type loans. I looked at myself as more of a consultant, trying to help people plan for buying a home, not a house. And back then people were buying houses.
Investments, flipping, trying to just get in where they could and make a lot of money, hopefully.
Yes.
I gotcha. So the conservative approach to loans, did that help you all stay alive through 2008?
Well, no, they ended up shutting down their small shop that they had. Before they did, though, I saw what was happening. I'm like, we need to be more strategic, and that's where I ended up at the mortgage firm.
You shifted. Okay.
Yep. I shifted. Know one of the owners from high school, so I've known him now 40 years.
Oh, wow.
Yep. So he had me in, and the process, the corporate culture at the mortgage firm is second to none that I've ever experienced anywhere. It's really great, not just for the employee, but the way they treat their clients and everybody. Their reputation really stands out in front. And they stand up for doing the right thing.
So that's why you chose them then. So
yes.
That was part of making that switch. So for novice people, right, that watch the show that may not be in the industry, right? When they hear mortgage, right, or they hear, is that title, is that lending, like where is that? Because you have your lending companies that are straight out calling themselves that, right? Then you hear mortgage company. Kind of walk people through when a mortgage firm is, right? What do they do?
Okay. Well, the mortgage firm itself is a lender. So they'll do the entire loan process. And believe it, Adam, it takes 12 to 16 people in the mortgage company to do a loan.
What?
Yeah, 12 to 16. We'll put together, if you're not self-employed, at least a 300 to 500 page file. If you're self-employed, it probably could be well over 1,000 pages.
Oh, my God. Well, I get that.
Yep. So all the decision makers, what makes the mortgage firm so great is all the decision makers are right here. So like I'm looking at you right now, I look at all the decision makers. They keep us educated as far as what to expect, how to set the right expectations for our borrowers, and they provide exceptional support.
So having everybody in the same room as opposed to, give me an example of we'll leave some names out, but of a lending type company, of what it normally is like.
Yeah. So say you walk into a local branch, right? The person that works there typically may not have the experience of in the industry, right? They're typically a little more green. They do not have the relationships typically with those 12 to 16 people. So they gather some information, they put it in the computer, and then someone else decides which route it goes. So, they may have what they call processing, for an example. They may have one in Tampa, another processing center in Iowa, another one in Colorado. And then the next step, and then the next step, and then the next step, they'll have duplication of all these processes. So it can go so many different ways. There's no relationship with all the people in the process.
So you wind up trying to chase your loan down in the process of where's the approval at? Well, you got to call the Iowa office. It's on them now. I'm waiting to hear back from the Michigan office. When it gets back to us, we'll call you and let you know.
Right. That could definitely be a route that I hear that a lot of people experience.
Wow. And so with the mortgage firm, all of those people, the processors, all the approval people sitting in the same room can walk down to this conference if necessary. All in the location is what you meant.
Pretty much, yes. Almost every single person works in our central office. We do have some people that work remote that are of a high caliber, high level. They do work remotely, but they're all obviously connected with the technology today.
Yeah. How has technology changed the lending industry?
Oh, my goodness. Now, I've only been doing this for 13 years.
Only.
Okay.
Okay. It's a decade and change.
Right.
Okay. As opposed to like the people in 2008 that opened up lending firms have been doing it for all of 3 months.
There you go. Right. And, it was amazing when I got into business back in 06, the very end of 06. I remember walking into a chamber event. You'll have 20 or more mortgage people walking around inside of a chamber event. Oh, I've been doing this 30 years, back in the 80s, all these people. And then you go back 5 years later after the crash and they're gone. They're gone. All those easy loans that easy for the mortgage person and easy for the people to get the loan, they obviously all went away. So you really had to work. You had to know what you were doing.
Yeah. So the way technology, I threw you off there, but I threw you off. The way technology is changing the lending industry.
Yes. In fact, today I just got back from a closing, and they signed almost every piece of paper before they even showed up to the closing.
That's good.
Yes.
Yeah, that's good. I know Patricia, who's a closer and a signer, has mentioned things like that. Is they show up. Most of them are signed except the important key documents you need.
Yeah, about a dozen documents is all that's pretty much needed now at the closing table. Not every loan's like that, mind you, but the conventional loans are that way, and I heard that other loans will be going that way in the future.
Yeah, I don't think it'll be long before it's all automated telesigning and webcast signing and things like that.
Yeah, I agree with you there, making it more convenient for the borrower. And I had the phone call last night. The borrower finally got out of work and he's looking through the documents and starts signing. He used to be in the mortgage business, and he's like, Sam, what is going on? I helped him buy his house 2 years ago, and he did all these renovations. Now he needed to recoup that money that he had in all these other pockets. So we did a cash out refi, help him collect all that money back up out of the high interest rates that he was paying on here. And he's like, this is great, man. I've never realized that you could do this. I says, yeah, it's a brand new program, about 3 months out. So I'm interested in hearing your feedback. And he called me back up, man, that was simple. That was really easy.
Yeah, most people would consider, right? I mean, you think about buying a car and people are like, oh, I got to be there for 8 hours.
Oh, yeah.
So you figure a car or a house would be 5 or 10 times worse, waiting for it. But it seems to get done quicker and quicker and quicker.
Yeah, it really does. And now closings can be 10, 15 minutes versus typically about 45 to an hour.
Yeah. So in the lending process, right,
Yes.
how often, right, if computer systems, right, are processing someone's application and giving it the red light or the green light, how often are you seeing more people that may get denied off bat through some system process, but are able to sit down with the lender and kind of talk about their life a little bit more, share the documents, walk them through it instead of just some red light, green light, approved, not approved, sorry, you're done, right? where is that in the system, right? Or, I mean, I'm gonna reminisce the time I wasn't alive, right? Where you walked into a bank and they knew you and they were like, "Hey Jim, hey buddy, hey, not good to see you. How's the store going? It's going great. We need to get a loan to expand, right?" But you could talk through some of the things that was necessary. Is some of that being lost, or does mortgage firm hold on to some of that?
Well, I think that's more of where someone in my position comes into play. You know, like in any other profession, you have different levels of people that are engaged, right? And for me, I find that the sooner you're engaged in the process to be able to know what your plan is, the better off you are. So most of the time, people are really smart and they come out 2-3 months before they start looking at homes and say, "Hey, I want to get pre-approved. Let's do this before we start looking at homes." Right.
Yeah.
And that's where we can help them out and say, well, if you take another step here, you can raise your interest or raise your credit score to get a lower interest rate, you know, maybe qualify for this other program that can help you. Versus, unfortunately, sometimes I hear people call me up, "Hey, the lender that pre-approved me now can't get it done. It's 2 weeks out. Can you get me done?"
Oh,
And I'm like, I don't know. I don't have anything to support that. So
somebody that may take one of those online lender apps,
there you go,
and fill it out and get the pre-approval letter with maybe 10 questions answered. Then they're walking out there and they go, "Oh, well, we actually needed and these aren't showing up. This doesn't look good. So we're not going to be able to do it for you."
That's it right there. You know, the documents are the most important thing in determining your eligibility. So you definitely need to provide those documents. The government requires from everybody. The federal government requires certain things from every person. They don't want to discriminate. They want everyone to go through the same process.
Yeah.
So it's now up to the borrower. When does that timeline begin? So, yeah, very rare. Thank God that I don't have this happen too often, but someone will wait until they have a contract to send over their documents, and then 24 hours after I have their documents, I'll go, "Hey, guess what? You're not approved." And they go, "Why are you telling me this now?" I'm like,
"Why'd you wait till 2 weeks?"
I go, well, 24 hours is not fast enough.
Oh God, 24 hours. Yeah.
Right?
Yeah.
24 hours is not fast. Yeah. So the borrower really has the onus on them to be able to start that process and control the timeline.
I see it's again kind of like the CSI effect, right? We were talking about it with a realtor that was on Melissa Stalzer yesterday about this. I forget Jake and I forget the home show, the flipping home show. Jake and somebody, she kept referencing that, and by the end of the show, we'd come up with a thing called the Jake and Jill effect, whatever their name was, right? That they think you just buy the house, you flip it. Oh, there's copper pipes, another 10 grand. Like they make it seem so simple.
Oh, right, yeah,
right. And so they have this same effect possibly because of those easy loan apps, right? If you're easy loan, I'm not meaning you, right? So just that online app where, well, don't I just fill this thing out and you guys red light or green light it and you could have told me in an hour, right? They have this idea, and a lot of car dealerships do that too, right? So really it's an effect that's not true because the process is so intricate.
Yes,
to get approved.
You hit it right there on the head. It's just one of the biggest financial choice most people make in their lives. And in my opinion, I feel that they should plan out a few months in advance, understand what would it look like at closing day before they even look at their very first home to put an offer in. They should know, okay, when I walk in this house, it's $280,000. How much money do I need to bring to close? And why do I need that money? That's the more important thing, is how do all these costs add up? And I find that most people and most lenders don't spend that kind of quality time. It's about a half hour, 20 minutes, half hour conversation. But I find that's the most important conversation we could have.
Okay. So walk me through that conversation, that first half an hour. Well, what's the discussion here? And so for people that are watching and maybe want to buy a home, or even realtors that watch, right, to think about, to tell them what's that important conversation that needs to be had.
Well, typically I ask a few questions, like what's your targeted price range or monthly payment? Most people are payment driven. So understanding what that payment would look like and what kind of house can they get for that payment. Now, lining up those expectations are really important. And of course, if you go online, those online calculators do not accurately project, oh yeah, online I saw I could buy this $350,000 house. It's only $1,200 a month. No, it doesn't work like that. So we give them simple tools to be able to help calculate. We'll go over a proposed payment and then say, for instance, every $1,000 is about $5 in your principal and interest payment. Every 10,000 is $50. So give them some simple tools to use to adjust that payment. So I'll go over their debt to income ratios, explain, hey, here's your income. Here's the monthly payment that we're looking at. That payment is whatever percentage of their income. Now, what I'm finding most of the time right now, which is a big blessing, is most people are going way under what the government says they can qualify for. So typically about, in the 20% debt to income ratios, even in the teens, they're not pushing the limit. So when I share with someone, well, the government says you could afford a payment twice that amount, their eyeballs big as saucers, and they're like, no way, I don't want that. Yeah. Right. So, and the reason I share that is like, well, just in case if you find a home that's $10,000 more or $20,000 more, and it checks all the boxes, and you don't have that long honeydew list to do anymore, and mama's happy, then it might make a difference to consider doing that, and you don't have all these renovations to do.
Yeah, I was going to say, I think even Melissa chatted about some of that yesterday is, people want to buy this fixer-upper house and have no extra cash in the bank. They're barely coming up with the $5 or $10 grand down to buy it, thinking you're going to walk into a house and be able to just put a new roof on it or do some new plumbing, new septic. You'll be fine.
Yes.
Right? Rather than maybe going newer, right, and maybe a little more expensive without, you said, the honey-do list that you got to do.
Right. So, of course, you'll have people who are in the profession of construction and renovation that are capable of doing those things on a regular basis, and then you have me, right? Man, me and the hammer, I'll have some bruised fingers. Yeah. Right. It's not the highest and best use of my time.
Yeah, we were joking yesterday about how people watch those fixer-upper shows, right? And they're thinking like, I could do that. I could learn how to put in a whole new kitchen. And then it's 6 months later in the kitchen. Yeah. The fridge is still in the dining room, right? You're on the edge of divorce, right? Yeah. It's ending for you. And I'm getting a look from a distance. No, but let's talk numbers, right?
Sure.
Let's talk interest rates. Let's talk what people are thinking, what the reality is of interest rates. Because some people, I think we were talking the other day, you told me something, people are waiting on some quarter point drop, right?
Right.
And then they'll think that, well, in 2 years, the house will be $20,000, $30,000, $40,000 less, but your interest rate will be up, right? So it's the same thing. So talk numbers a little bit. Where are the interest rates at? Good time to buy? What do you see them doing? You see these things all day.
Right. And I'm going to first start off by saying that my opinions are opinions. They're not.
Yes. Right. He's not a financial advisor, people. Okay. It's just what he sees.
Right. So back at the beginning of the year, we started off interest rates were hitting 5% on a conventional loan, and now they're in the mid threes. Right. So between 5% and the mid threes, the government lowered the interest rates a quarter point. So we had a 1.5 point drop in interest rates, but the government only dropped it a quarter point. So that's based on short-term interest rates, what the government lends overnight. But what it really does is create a lot of buzz in the system, in the marketplace, where people will come out and going, well, geez, that should go transfer into 30-year mortgages. But it really doesn't. It really does not. The 10-year treasury is what really you want to track. As far as when that starts to move up and down, that's where interest rates on a 30-year typically move.
Okay. Go on. Go on. I know you got some more in there, man. You see these numbers all day.
Yep. So I believe that the rates are going to be stable. We'll have some ups and downs, but I feel from what I hear from experts and what I'm seeing in the marketplace, I believe we're going to be stable here in this area of probably 4 to mid threes on a 30-year fixed. VA, FHA, they're lower than that.
Oh, wow.
Yeah. So you usually can see a good quarter point difference between.
So is it worth a potential buyer like holding out, for that quarter point?
I don't believe so at all.
Why would they do that?
I'm not. It's a perceived value.
Ah, okay.
But I think they're missing the bigger picture, and the bigger picture is rents are going up, houses are going up.
Yeah, I'm telling you, rent is ridiculous. I'm born and raised in Orlando. I know every quarter inch of this city, on the outskirts to the inside. And I'm not like going 10 years ago you could rent, right? I'm not saying that. I just mean in the short period of about 3 to 4 years, I swear rent's gone up 30-40%.
Oh yeah, Adam, without a doubt. You've seen that pressure on affordable housing. It's just it's really making a difference, and people are becoming quite aware of that. The housing shortage of affordable housing.
Yeah.
Right. Because it doesn't seem like they're building homes under 200,000 out there right now. And that's where a lot of starter homes or people who are looking to buy are falling into. That's where they want to be.
Yeah. I mean, at least to start, right? I mean, you're seeing all these subdivision on the outskirts, Lakeland, Mount Dora, right, popping up, but they're 300, it's your 300 plus.
Right. And without a doubt, much of a down payment, you're talking probably close to $2,000 a month on a $300,000 purchase. By the time you had your insurance, your taxes, mortgage insurance, if you're not putting 20% down.
Yeah.
So that's a starter home.
Yeah. The 300,000 is your starter home.
Yeah.
It should be somewhere around 220, right? I'm guessing.
Well, that's where people want to be, closer to probably the 1,200 mark, maybe 1,500 mark on a first-time home buyer, or less. We try to help people who want even 800 or less a month payment. But the key here on something like that is you really need to have a realtor that's in it to win it, that's full-time, that has nothing else to do but help their borrowers and their buyers buy a house. Because when you're in the market for a home like that, people who are just doing it on nights and weekends, they're going to miss opportunities that move so fast. They're going to miss out.
Yeah.
So
your part-time realtor, buddy, friend, person who you know from whatever club is not somebody you should be going with to buy a home. Sorry. I mean, this isn't the first time we've heard it on this show either.
Right. I would say that, yes, without a doubt, especially if you're in a tight market, you're in a high-end market or a low-end market, as far as price points, because you really need that special attention to get that home sold, and to get the best value.
All right. So we got 2 more questions, right?
Sure.
Before we wrap it up. Why use the mortgage firm? Tell me more about them. Give me the sales pitch of mortgage firm, right?
Okay.
Of why they need to come there. And then we'll follow up with the last question we ask everybody at the end of the show is, what is the state of real estate? But answer the first question first and walk people through the mortgage firm, why to use them. You know how to do it. You're the marketing guy. You know what you're doing.
Right. Well, the mortgage firm, I love the mortgage firm for, again, the corporate culture. I mentioned that before. Super competitive on interest rates. We'll shop out over 20 different lenders: Wells Fargo, Chase, BB&T, just to name a few of the ones that we'll shop out. We're accountable for the entire performance of the loan. So we do it from the very beginning to the end, and they track the performance of the loan to make sure that the payments are on time. And if someone's like 30 days late, that goes against us. Even if we sell the loan to one of the other lenders, Wells, Chase, what have you, that goes against us, not them, because we originated the loan. Now, thank God that's very rare, and our percentages are extremely low because we do it the right way, all the verifications that are needed. So smooth, that's the big thing. Smooth lending is really, that's my tagline. Yeah. And it's true. I don't like stress. Oh my gosh. Nobody really likes stress, right? Right. So I don't like stress. I personally do. I guess it's a weakness, but then also a strength. I feel the emotion of a buyer, a borrower. So I'm excited when they have a contract and they're moving on and in the process. And if there's ever any stress in the situation, in the process, we're there to help them. And it tends to be this, if there is stress, it's more on the seller side the house isn't properly ready, they have to do a couple things.
Yeah.
You know, but again, we're a part of the process, so we need to help counsel the borrower to make sure that they feel comfortable in the situation, give them the resources to give them that confidence. So we look at ourselves as more of a consult and not just a transaction.
Yeah.
That's what I love about the mortgage firm. They want to build relationships.
Not just another number punching through client 0613.
No. Now we do have systems and process to make it smooth, right? And we surround ourselves with very powerful women and also men, but women typically are the people that are behind the scenes, that 12 to 16 people. A lot of powerful women, man. I'm blessed to have these wonderful ladies all around me that really keep everything on cue and track to make things happen.
Yeah, man. Now we just need one for maybe president, right? No, I'm kidding. I'm not going political on the show. I'm just saying my mama ran my house wonderful. That's what I mean. All right. My matriarch grandmother, we got them running offices. They're running things. I'm just saying, all right. Like 8 people are like, oh, I hate this guy, right? They're already gone. But no, I mean, it's a good point, man.
It is a good point.
We need the people around us. And I think a lot of people don't understand, especially first-time home buyers, don't understand that if you got somebody that's working with you on the lending side, it's not just about a thumbs up or thumbs down, that they can find a way to get you approved, that can work with you. Try this. Did you know you can do this? If you file this, wait 2 months and try this. You know, a lot of people don't get that. They think they just go, here's my paperwork, yes or no, and realize that you may get a yes if you just listen to somebody like the mortgage firm that knows how to guide you through the woods.
Right. And then the other piece to it too is we actually can give consults on how to potentially increase your credit score. And when that happens, you can get better interest rates. So it's not just, hey, let's get the loan done. It's how can we get the best loan for you?
That's huge because, right, another company may just go, hey, get them in here, wrap them up, get them in, get them out, file them up. Here's the loan. Sorry, this is what we got you. It's the best we could do. Instead of going, hold off. Wait 2 months, do this little thing we're telling you how to do this, that, and the other. We can save you a quarter point or more.
That's right. You know, the consult.
Yeah.
Right.
Yeah, I think that's well worth seeing a company like the mortgage firm for sure. The last question before they kick us out of here is, Sam, how do you see the state of real estate today?
Well, at least in the Orlando market, I think it's just going to continue to blow up. I truly do. I don't think there's any pulling back. Even if the economy was to take a dive down, it will be stable. Like we talked about at the very beginning, when I got in the business, they were giving loans to everybody. It was crazy, and that doesn't exist at all anymore. You have to qualify. You have to be verified. So the reason we had the crash before is not going to happen again, at least as long as they keep the processes and accountability. That's the big thing, the accountability. You just got to verify and be accountable. So with that in mind, we all know Orlando, Daytona to Tampa is going to be one huge city within probably another 20 to 30 years. I mean, it's just growing incredibly well here. So this marketplace is going to go gangbusters.
Yeah. Wonderful, man. That's great news. I know more and more people that we've had on the show have said that. So if you're a home buyer, it's a good time to do it. If you're in the industry, realtor, from lending, mortgage side, either wherever you're at title, it's a good business to be in currently right now. Yeah.
Yes,
and looks to stay that way.
Yes, it is.
All right, Sam, where can everybody find you if they want to use your services?
You can give me a call, text me, 407-792-9922. That's my direct line. You can reach directly to me. I manage every piece of the process, but I definitely have the team, execute on many of the functions within the process, but it all goes through me. So feel free to call me, text me, whatever's the best way for you to communicate with me. 407-792-9922.
I love it. No one in the real estate business is afraid to put their phone number on social media. I love it. They're out there all over the place anyway. If I did that, it would be problems. I appreciate you, Sam, joining us here.
Hey, Adam, it's quite a pleasure, man. I really enjoy our time together. Thank you.
No, I appreciate it. I'm hoping by the time I'm more, I don't know, 5, 6, 17,000 episodes into this, I may be an expert in the real estate industry.
Man, you did really good, man. And that beard, that looks really styling, brother.
No shave November, man.
Yeah, I had to cut mine back. I'll get mine growing out like that next year.
Yeah, no shave November is where I'm at right now. So
looks good.
Sorry that it looked like I just woke up like an hour ago.
You did.
Yeah. Did I? I think I did.
I got your pillow right over here.
We've been hanging out. Sam, man, thanks a lot for being on the show. Everybody, look up the mortgage firm, Sam Dongilli, one of the best guys I have ever met, one of the nicest guys I've ever met. And unless you want it to be a rough go-round for your mortgage lending approval, this guy does it smoothly, and his team makes sure that happens each time that they line you up for a loan. So this is the State of Real Estate podcast. Adam Lowry signing off. Hope you all are doing well out there. Hope your new home buying's going good. Hope you like the new home you're in or the home you sold and you're loving your realtor at the same time. Thank you all for tuning in constantly to us. And as always, thank you to Venture Title, the sponsor of the State of Real Estate podcast. We couldn't do this show without you. Big shout out to Amy and Mike and Julie over there, as well as Jennifer. Love you guys. We'll see you at the office here soon. Signing off. Take care.
Have a good day.